Welcome to the latest edition of Fundamentals. This time around, I'm going to look at an actively managed member of our list of 72 favourite funds, namely Crux European Special Situations. The fund's objective is to produce long-term capital growth by investing in European stocks with a maximum 5% exposure to the UK, where managers Richard Pease and James Milne feel a special situation may be developing. In this case, this means there's a particular focus on European medium-sized companies that tend to be strong in a particular global niche. The managers look for capital-light companies which have a high degree of recurring earnings and high returns on capital, and should therefore prove resilient in uncertain times. Also, they're looking for good management who are incentivised by share ownership. As we can see here, mid-cap stocks represent just under half of the fund, compared to barely a third for big caps and a fifth for small caps. Pease and Milne are both very experienced and they've run this fund since 2009. They actually brought the assets with them when they joined Crux in 2015. Richard Pease has worked in the financial markets for more than 30 years, though he may not thank me for reminding people of that. By sector, the biggest exposures are industrials, financial services and consumer discretionary at 31, 16 and 14% of the £2.2 billion in assets under management. By contrast, utilities, energy and telecoms are all barely 1% of the fund apiece, and Crux European Special Situations is currently underweight oil, consumer goods players and telecoms firm, a slant which has hampered performance in the past month or two, notably thanks to a strong oil price. The portfolio is a pretty concentrated one with just 62 holdings. As I sit here, the biggest positions are Around Town, a German and Dutch real estate play, Danish support services firm ISS, the Anglo-Dutch academic publisher Relx, German asset manager Aurelius Equity Opportunities, and another Dutch specialist publisher and information provider, Wolters Kluwer. The portfolio is built bottom up, so stock selection will take precedence over geographic and sector calls. But for those who are interested, the leading country weightings are Germany, France and Sweden at 28, 13 and just under 11% of the assets. Next we come to the yield on offer. We're talking about the accumulation units here, where the semi-annual dividends will be reinvested for you and the 12-month yield is around 1.3%. The fund comes with an ongoing charge figure of 0.86%, so you do have to pay for the expertise of the fund managers, and for those who put faith in such things, the fund has got a 5-star Morningstar ranking. As a final point, the Crux European Special Situations Fund is eligible for SIPs, ISAs and dealing accounts, and the minimum investment is just the one share, and that will cost you just short of 290 pence at the moment. So, if those are the mechanics, the question to address next is why could investors consider this fund for portfolio inclusion today? I think there are 3 perfectly possible reasons. The first is that Western Europe is only the 5th best performer among the 8 major geographical regions so far in 2018, with a total return in sterling terms of barely 1%. That might appeal a little bit to contrarians, especially as Italy now has a government, with a less Eurosceptic finance minister than feared, and Spain has a new pro-EU administration under Pedro Sanchez. Both developments may ease some of the political concerns which have hung over European stock and bond markets, as well as the euro currency over the past few weeks and months. The second is that the European Central Bank continues to express confidence that the EU economy is gathering momentum and could even be sufficiently strong to finally do without the prop of quantitative easing or QE come the autumn. And the third, well, that's the nature of the Crux European Special Situations Fund itself. You might not care about the macro picture in Europe, and as such, this fund that's built bottom up may appeal, especially as its focus on mid-caps means it's very different from a lot of its peers. The managers certainly get results too. This chart shows the performance of the fund since its inception, both under its previous guise and its current one at Crux, that dates back 3 years. However, we must always remember that past performance is no guarantee for the future, and the Crux European Special Situations Fund may not be suitable for all investors, also for 3 reasons. The first, well, that's the 1.3% yield, which may mean that income investors are perhaps unlikely to be particularly enthused. The second is that European stocks have feasted off the zero interest rates and dollops of cheap cash provided by the European Central Bank's quantitative easing scheme, as it's left continental investors chasing returns from stocks rather than cash or, to a lesser degree, bonds. It could therefore be a challenge for European shares if the ECB stops its QE scheme, which is currently running at €30 billion a month when it's due to expire in September. The third possible reason, well, that's the fact that the European economic and political situations are far from cut and dried. We've still got the Brexit negotiations ongoing, trade tensions between the EU and America are escalating, and the European banking system is still weak, hobbled by too many participants, too much debt, and too few willing or indeed suitable borrowers. To have maximum confidence in both the EU's economy and its stock markets, you'd really like to see the banking sector doing better than it is right now, even if the managers of this fund care little for such top-down issues. What this does all go to show is that investors must therefore do their research on Crux European Special Situations Fund to make sure that it fits with their overall strategy, target returns, time horizon and appetite for risk before they put any capital to work. Thank you for watching, and I look forward to seeing you next time.